Bilal, thank you for that. I'd had this pressed. I had the mute button pressed. Sorry, Andrew's just fixed it for me. Good afternoon, everybody. Hope you're well. I'm not going to read out the disclaimer again. It's been there long enough, hasn't it? So let's crack on. It's live analysis today, guys. So anything you want to talk about, discuss, it's obviously Fed day, 75 basis points expected in the next few hours. The third consecutive 75 basis point hike. We were down at zero back in March, weren't we? And off we've gone quite significantly. Mohammed, we'll have a look at gold. Is gold going up to $1,700? It will go to $1,700 at some point. The question is it going to $1,600 first? I would ask Mohammed. We'll come back to your question in a minute. Okay. London FC, MUFC, good afternoon. Bilal, I'll just leave that on there because we'll do gold in a minute. I'll come back to that. Ganesh, good afternoon. Hope you're well and evenings. And the Indian cricket's going okay. Is it in South Africa? You're playing Australia? I can't remember. I've lost track. Too much cricket at the moment, isn't there? Everywhere. England playing Pakistan. Where's my slides? There we are. So this is me. I've been around a while. As you can probably tell if these cameras on. I spent 20 years plus in the City of London working for investment bank and, a retail bank and then an investment bank. My approach to investing and trading has always been the same. Do what's probable, keep it simple, and look at multiple time frames. But most importantly, know yourself. This business is a psychological business. The psychology of trading is by far the most important thing. It's not seminars and webinars and videos and the latest technical analysis or the latest fundamental analysis. It's understanding yourself and being able to accept losing, and losing much more than you would anticipate when you start trading. When I say much more, I mean the number of trades that you lose. Most successful traders don't have a very big hit rate. They don't win that many trades. They'll win 50, 60, 70% if they're very, very good. And that's one issue. The other issue is actually managing those losing, that 40% of losing trades. That's where the trick is. That's where people's edge are. So risk management, have an edge, understand yourself, manage greed and fear as the same thing, patience, discipline, all those soft skills we learn as children. Our parents drilled into us. So anyway, more on that, my risk management and webinars. So have a look at those. Today it's all about the actual market. So thank you guys for putting that in. We'll have a look at gold and the Dow, the NASDAQ as well, obviously. So we're going to look at the news. Obviously, things you want to have a look at. Cryptos have been moving quite aggressively. We've had this very, very successful technical merge of Ethereum, where it reduced its power requirements like virtually 100%, but the price has gone down as the markets. All crypto prices are under pressure, as is all risky assets, given the general sentiment in the market. So this week's been a huge week. Come on, what do you think of smart money concept? We'll come on to that in a minute, my friend. Olivia about NASDAQ, absolutely, no problem. Alex, let's have a look. So that's a quick look through this week. Remember, the other thing, guys, we're in the third week of September, so there's 2 more weeks before the end of the third quarter, which has been very choppy. September, especially these second 2 weeks of September, are notoriously volatile, notoriously weak. I can't get to my book. I bought a book in the late 90s, and it said about the UK FTSE market. 1998, I bought it. And it said the worst trading day of the year is the 26th of September for the entire year. And that's always stuck with me. So it's the 10 worst trading days of the year, the 26th of September, as far as the FTSE is concerned. And ever since then, I've manually monitored the market. And ever since then, September, this second half of September particularly, has been particularly weak for equity markets in particular. So I said particularly 3 times there, didn't I, in a row? Sorry about that. Pressure on. Dollars bid, dollars king. Don't fight the trend. We've had some mixed data this week. This is this week. Obviously, today is all about this one down here at the bottom. The FOMC announcements. 3.25%. They're talking about raising rates by 75 basis points. So that will take the overnight interest rate for remember this for money market as well. So Joe Public are paying much more than that. The 30-year mortgage rate in the United States went over 6.2% earlier this week as well. So that's the first, that's highest it's been for over a generation. Yeah, pressure on for Joe Public and Main Street, let alone Wall Street. So see what Powell's got to say later. Probably stick to the mantra of the 2% inflation target is what we are driving for. That's re-emphasising the hawkishness of that tilt that they started a while ago. And obviously, there may be some comments about the QT, the quantitative tightening, how they're going to start selling off this massive balance sheet that they have. We'll see how that goes later today. Tomorrow, where's my slides here? I've got so many things going on here. Tomorrow is the turn of the Bank of Japan overnight, 6 o'clock server time, 3 o'clock GMT. Interest rate decision. No change expected there. There's been sort of lots of talk in Japan about, from the government and from the Bank of Japan, about the weakness of the yen. We're at a 24-year low again against the dollar. 144 has been taken out again today. We come down a bit from that at the moment. But we very much, the world's third biggest economy, very, very much in focus. They're looking to try and stimulate inflation there, so they're keeping their accommodative policy going there in the face of all of the rest of the main central banks in the world, in the main industrialized countries, raising interest rates. So it's a huge policy divergence, hence the massive charge down for the yen. When and if the Bank of Japan intervene, they tend to intervene quite aggressively to preserve the value of the yen, because it's obviously making imports incredibly expensive. It's great for exports as an exporting nation, but making imports and energy costs very expensive. And just below that tomorrow as well, after the Bank of Japan, is the Swiss National Bank, also the king of the negative interest rates, Mr. Jordan and co. Obviously, we're now back into a positive territory, expecting 75 basis points that you see there from the Swiss National Bank tomorrow. So that'll be a bit of a turn-up, first rise in many, many years. And then closer to home, here in your other side of the channel now, the Bank of England. All sorts of pressure on the Bank of England. We've got a new Prime Minister, Miss Truss, talking about trying to cut taxes, repealing the expected rise in national insurance and corporation tax. Probably on Friday, when her new Chancellor Kwasi Kwarteng, has his first mini budget. So and trying to the Trussonomics, as they're calling it, this trickle down effect, which didn't really work every other time in economic history I've checked out, but that's what she's determined to do. 150 billion pounds worth of spending stimulus for to support the UK economy, both households and businesses, over this winter and coming winters as well, because the energy crisis in Europe is not just for this winter. So we'll see. Anyway, so Bank of England Thursday, Swiss National Bank Thursday, Bank of Japan Thursday tomorrow. Top of the shop is obviously the Fed today. So lots and lots of potential moves, certainly within the Forex markets. That has a ripple-on effect to things like crypto. It's the yields also driving sentiment in the markets, and that's driving equity markets to new lower lows. Friday, packed with PMI data, normally quite a mover, but we're moving into the end of the third week of September. So PMI data across the globe on Friday, retail sales out of Canada as well. And then another speech from Powell. He starts an online conference with a speech late on Friday night, as the US markets are closing. Next week, it is the final week of the year, of the month, of the quarter, I should say. The main event is not actually marked on here, actually, but for me, the main event is on Friday the 30th, which is the PCE number, the Personal Consumption Expenditure number. It's the Fed's preferred measure of inflation. Obviously, it's coming out too late to affect their September decision today, but obviously it may have a significant impact on their October, November, and December decisions. So see if the cooling of interest rate hikes comes later in the year, 50, 25 basis points potentially. But at the moment, they're going for broke and trying to catch up. Durable goods, GDP from the US, GDP from the UK as well in that final week of the month and the quarter. So again, expect some significant volatility next week as we round off the quarter, round off the month, and then we move into October. And then within couple of weeks of October, the third quarter earnings season kicks off as well. Remember, we've had those big we had that massive 20% fall for FedEx on last Friday from their announcement of stopping. They stopped views on what they were going to do next. And then Ford talked about lots of vehicles they couldn't sell because there's parts missing, basically. So the supply chain crisis affecting Ford. They announced that yesterday, and their shares fell 12% yesterday. So it's rippling out. It's going to be a very sticky third quarter by the looks of things. So that's what's going to happen, or what's planned to happen as far as the economic market is concerned. But obviously the other big thing that's happened today is Russia's President Putin announcing a partial military mobilization of 300,000 Russian reservists. People are not allowed to leave the country. Any people are leaving. The flights are full already. There's no more flights leaving. And so it's a big ratcheting up of the tensions over Ukraine and the Donbass in particular. The rest of the great and the good of political leaders are in New York at the United Nations, and to a man and lady, all condemned the Russian situation in Ukraine, save the Russians and the North Koreans. But sorry, not the Russians, the Chinese and the North Koreans, but they're actually in New York at the UN. Anyway, that's for another day. So it's all about you guys today. So let's have a look what we're looking at. First up was Mohammed asking about gold, wasn't it? So why can't Mohammed see? Why isn't it on the screen? It's because that's my slide screen. So Mohammed's asking about gold. So let me find my charts. There we are. Gold. Again, Mohammed, I don't know if you're talking about gold. Were you saying, will it go back to 1700? I very flippantly said, yes, it would. Obviously, possibly today, who knows, but at some point. So 1700, Mohammed, I'm sure you're aware, is this big thick line up here, which we crashed through late last week before the big surprise here on Thursday. Is that Thursday? Yeah, that's Friday. Yeah, there we are. The big down day we had on Thursday. So 1700 was holding, basically. This was Tuesday last week when we had the surprise from the CPI data. So that was the next kickoff. That cooled off the dollar cooling, basically, and the dollar's rallied from that big CPI surprise last Tuesday. So gold, conversely, has done the opposite. So we've huge down candle here as the news came out. Another huge down candle here on Thursday. We went as low as 1645 here on Friday. We recovered to the key 1680. I say 1680 is key. It's a key end of day support, daily support, or had been. And as you can see, we've crashed through that on Thursday, and we haven't been back over the key 1680 level since that last Thursday. So if I go to the, this looks a bit messy on the daily time frame, but 1680 is a key level that takes us all the way back. If I go to the weekly on this, you can see this is a major support level here from July and earlier in the year as well. So 1680 is key to the upside. So we need to break that if we're going to get back to anywhere near 1700, Bilal. But you can say it's been a big move down. Sorry, Mohammed. Zoom that in. So currently today, interestingly, the histogram on the MACD has just ticked above the zero line. We've moved higher here this morning following Putin's announcement, and obviously lifted gold, safe haven asset. But it's cooled a wee bit. Gold has continued to rally. So today we need to get over yesterday's sort of high, which sat around about 1677. And then that key test here of the 1780 level, which we did test very, very briefly here on Monday, and again here on Friday as we close positively on Friday. So 1677 and 1680 is the upside resistance today. Support now sits through that 50-hour moving average and the 20-hour moving average there, the blue and the magenta lines there at 1668.50. Mohammed, my friend. Bilal can now hear me. Next up is London MUFC 45 asking about gold. Well, there's gold intraday. MUFC, my friend, that's on the 1 hour. Let's look at the 4 hour. 4 hour bit sort of more sort of channel bound really for September. So it's topped here at 1676 on the 4 hour, and it's got support around about 1661, that lows we've gone to. So that's the 4 hour channel from the top to the bottom, from the top to the bottom, and back to the top again. So 1676 here on that 4 hour chart, again remains quite weak, although this current candle, which we can't make a decision on because it's still got 2.5 hours before it concludes, is sort of breaching over that 21 EMA. That's the purple. The magenta line here is the 21 EMA. The blue line is the 5, and the yellow line is the 9 period EMA, and this blue line here is the 50 EMA. So trending down here, trend following under its key moving averages all aligned to the downside. So we're trying to have a bit of an update here on this. The Putin announcement, it may cool a bit, so it needs to break and hold over this 20 if it's going to move up, and then obviously attack that key 1680 level, and then 1690 here, and then the big 1700 above that on the 4 hour time frame. London, again, I don't know what time frame you're trading that on, my friend. Do let me know, and we'll come back to it if necessary. And the Dow was the other one you were having a look at. Dow moves around very nicely. So Dow here on the daily remains to the downside under its 20-day moving average, which sits all the way up there at 31,581. Under the key 32,200 level, which is where the 50-day moving average is. I don't know if you can see that. It's that blue line there. So again, in a downtrend from this rally we'd had over the summer on weak volume, as I did point out. I'm sure I pointed out a lot of the time. But the signal line here on the MACD clearly down. It's flattened out a wee bit, but 30,300 here. We're under 31,000, sort of consolidating a wee bit in the last couple of days. But the wicks, it doesn't really want to hear. This is suggesting it doesn't really want to go much lower. But the trend remains to the downside. The highs have got lower. The lows have got lower. We're under the 50-day moving average. We're under the 21-day moving average. We're under the 9. We're under the 5. So they remain nicely aligned, trending lower. Next support, 30,300 on the daily time frame through here. And then this low in June will be tested. Well, I'm saying will be tested. The intraday low here took us under 30,000 at 29,650. I'm sure you're aware of that, London, if you're trading this at all. So they're the daily levels to the downside. Intraday, 4 hour, sort of flattened out a wee bit. Needs to break over that 21 EMA. Get us back to 31,000. That's that dotted line at 30,975. The 50 hour again, way below that at 31,300. But sort of again, some sort of support here on the 4 hour and the 1 hour. Here, big low here at 30,000 yesterday, 30,500, and we sort of bounced from that into close yesterday. But again, even the 1 hour is capped by the 50-hour moving average. So we got immediate resistance here. Let's run that up a bit. It's tested in the last couple of hours, isn't it? So 30,800, 200 points short of 31,000, which sits up here. Sorry, 31,800 is the immediate resistance to the upside. Strong candle here in the last couple of hours. MACD signal line rising a wee bit. Histogram still remains negative and under the zero line. I've only got the RSI on here. RSI relatively neutral at 50, or is neutral at 50, I should say, not relatively, but so I'm trying to mock up. So a break of 30,800 would be good for the Dow on an intraday basis. So quick sup. And the NASDAQ. Interestingly, yesterday, the S&P 500 fell 1.13% yesterday. Why is that interesting? Because it was the worst performer of the three major indices. Normally, in these ups and down days, we've had the NASDAQ leading everybody, the tech stocks, the big heavyweight tech stocks. And the key thing from yesterday was the fact the whole market fell. The S&P was the worst performer of the three major indices. And the only positive green flag in the sea of red yesterday was the world's biggest company, Apple, was up 1% So without Apple rising 1% where everything else was falling dramatically, there would have been a serious sell-off yesterday. We lost 44 points on the S&P 500. The NASDAQ similarly down, but not as badly as the NASDAQ, the S&P yesterday. And I'm looking, I'm trying to find my S&P. Where's my? Actually, let's go to a different profile. By the way, chaps, ladies, traders out there, I'm using the black background with the red and the white candles. If anybody prefers the white background, please let me know. We can bring that in as well. The black is just easier on my eyes when I'm staring at it, but I don't know if some of the lines get lost with the black background, don't they? So what was I doing? I was looking for my index charts, for the NAS for Aspect. Where's the NASDAQ? There we are. USA 100 daily. So again, this is the daily. So you didn't get to the 200-day moving average. We're under that. We haven't got the 50 on here, but you can see the trend remains the same. There's that big sell-off last Tuesday after the surprise in the CPI report. MACD signal line down. The histograms sort of relatively flat, but remain negative under the zero line. 29.5 trend is still to the downside. So where's the next support here? Next support really take us back here to this July end of day, which took us to 11,700 or 11,689 or 11,700, which we've tested this week, interestingly. And so look to the left, where's the next sort of level? Where it's on an end of day basis, it's sort of through there. That takes us to 11,500. And then the June low for the NAS took us all the way down here to 11,035. So 11,000, big line in the sand for the NASDAQ 100. Trending lower on the daily time frame. 4-hour time frame also lower, had a spike higher earlier in the week, rolled over through the 20 period moving average. They're flattening out a wee bit, so but the Dow returned to the downside with the 5 there. That was it, spiked up. The 5 has gone back under the 9, and so we're slightly moving down, but quite weak 4-hour candles there again. So that key level here, 11,000 here on the 4-hour, just bring that up, takes that 11,735. So just over 11,700 for the 4-hour trader, and the 1-hour trader was down yesterday, rallied into close a wee bit, and it's been sort of flattish today ahead of the Fed, undoubtedly. So again, biased to the downside, very range bound so far today, as you might expect. To answer your question, Aspect, what do you think about smart money concepts? I don't know what you mean, Kuram. What do you mean by smart money? Are you talking about cryptos or just smart money generally? It'll come. I'm a big fan of technology. I might not look it, but I've been around the block a lot. For me, technology will always find a solution, or will always push the boundaries out. Whether the human spirit or the human psyche want it or not, things will come. There was a fascinating story I was reading overnight. Mr. Musk, the most fascinating character for a generation, is talking about releasing his humanoid robots on a huge scale in his factories. Apparently, there's a big announcement on the 30th of September at the end of the quarter. So watch Mr. Musk when it comes to smart stuff. Really, Kuram, he's much smarter than I am. So smart money, digital currencies, central bank digital currencies will come. It's inevitable. The financial system is sluggish. Lots of people are very anti it, given the huge crash we had in 2008. But we've had many bigger crashes in 2008, and it survived that. But things are moving on. Technology's moved on a huger pace, even since 2008. So, and you can't stop it. It's like Canute trying to stop the waves coming in. It will happen. Alex, I would love to hear about NASDAQ 100 prediction today. Well, NASDAQ, we don't do predictions, Alex, and you as a trader shouldn't do predictions, should react to what's going on. So NASDAQ, here it is. Well, what's that telling you, Alex? You tell me, my friend. What's that telling you? That's not doing anything, is it, today? It's just, sideways. It's waiting for something to happen. So clearly we have a cap at this 20-hour moving average today. If you're talking about today, Alex, there we are. We've got a cap here. If you put your, if you put your pivot points on in your, zooming this up, if you put your pivot points on in your support and resistance levels, they'll be generated automatically on your chart. I haven't actually got them on this particular workstation, but that's what I'm seeing today. We've got a cap at 11,879, so call it 11,880 for round numbers. But obviously, any surprise from the Fed, it's that they could still go with 100 basis points. Technically, I'm saying technically, they could still go with 50 basis points. None of that is likely to happen, or probable to happen, but it's still a possibility until it's actually announced. Don't try and predict, Alex, because there's bigger, more sophisticated, much, much better capitalized people out there that get the information even a split second ahead of us Joe public traders. So, react, don't predict, my friend. At the moment, that's a support trend line from yesterday's low on the 1 hour time frame. 11,880 is the cap today. There's the 1 hour trend line. It's been as low as down here, but anything could happen. Remember, this is the futures market before the actual cash market opens in a couple of hours. So 11,790 is that low of the day thus far. And that was between 10 and 11 this morning. So that might get tested later on today, as well as yesterday's low, which took in this 11,735 level from the day before, as well as you can see on that yellow chart. Excuse me. Right, there's lots of stuff coming in on. Go to webinars. I'm saying, which one is best on growing small accounts from scalping and long-term trades, says Nala. Nala, you have to, we're all individuals. There's 7 billion people in the world, and anybody over 18 could have a trading account. And we're all individuals. We all have an opinions. Opinions don't matter in the market. Egos don't matter in the market. It's what fits you in your psychology. Look yourself in the mirror, Nala, and look at yourself. Can you manage losing? Can you deal with losing? Can you deal with winning? What's your personal risk profile like? I don't know. Because you've got to be honest with yourself. The markets are absolutely brutal. They go up, they go down, they go sideways. That's all they do. But they don't care where our stop loss is. They don't care where our trades are, our stop losses, our targets are. Whatever it is, it just does what it does, and that's what it is. It's a network of huge computers trying to fill all these orders in. So it's what fits your personality. Scalpers get a lot of experience very, very quickly, but you've got to be able to be in and out of a trade very, very quickly. Long-term trades, you don't get very many. If you have a system that sets up, you might only get 1 or 2 a week. Does that fit your personality? That's what you've got to find. Peter, can you hear me now? Somebody's saying there's no sound now at 14:20. Still looks all right. No, yeah, Peter's saying again he can't hear me. Anybody else on GoToWebinar can't hear me? Let me just send this to everybody. Can you hear me? Send to all. It's clear. It's clear, says Jamie. It must be, Peter, it must be just your... I think it may be your end. So Peter, try reconnecting your and try reconnecting. Sorry, I can't type any quicker than that. It's one finger stuff. Try reconnecting. Okay, everybody can hear me loud and clear. Nicholas, George, thank you very much, my friends. Alex, I hope that's answered your question as well about the NASDAQ. So that's what you want to be looking at today if you're interested today. Obviously, yesterday's high was all the way up here. Let's just do that. Yesterday we went up there. So there's another one, 12,000 key level. So big round numbers, big round psychological numbers. Buy smart money, Amenka concept. We are using price action based on supply and demand with order blocks. Mitigation of imbalances, market structure. Very good, Amenka. That's fantastic. Yeah, if that's how you trade, that fits your methodology. That's fine. Yeah, the smart money. That's what you mean by smart money concepts. Yes, they do exist. Sorry, I'm with you now. No, was it Bilal that asked that before? No, it's Kuram asked about it before. Yes, they're the in crowd, if you like, the people that know the information, know what's going on a bit earlier than we do. The leaders, the early adopters, if you like, that move markets. They get in early, they get out early. As the crowd gets in, they cash out, and then peaks out, and then they sell at the top and trade it down as well. But yes, I mean that's if you can trade that, that's a very good strategy. Whatever approach you have, stick to it. Basically, try it, back test it, but stick to it. And you need a significant amount of trades just to prove the statistics, the maths of whether this concept will work or not work. And as I say, hundreds, if not thousands of times, most people fail in this business because they give up too early, because they've risked too much and they've blown their account far too early. Accept that you lose, keep your losses small, and the winning trades will take care of themselves. I know it sounds a bit flippant, but they will. I quote this figure all the time. There's a huge broker, well, they were at the time, did a massive survey of millions and millions of trades, and they found that about 63% of all trades were successful. I.e., they were winning trades. But of those 63%, most people lost money, because when they lost the 37% of trades that they lost twice as much as they won on the 63% that they won. And that's the problem. That's what we do as human beings. We can't accept losing. So we keep it on. We hang on to it. Whereas as soon as we see our trade, it's profitable, get into a bit of it goes green, profit, we close it too quickly. Turn the telescope around. Look at things differently. Let your winning trades run and cut your losing trades short. If you can't do it manually, that's why take profit and stop loss is so important. But anyway, that's my mantra for another day. Charles has just said here, I'm a first-time trader. What's the lowest amount of capital I can start with? Charles, I can't give you any advice on that. You can have a physical account, a physical stock with an investment account from $5, but that's not going to make you a successful trader, is it? Invest as much as you can, but be prepared to understand and accept that you might lose all of it. Again, very harsh words, I know, but that's how one has to think. Successful traders, Charles, people who have been trading for a long time, every time they open a trade, they know where they're going to get out, whether that's their take profit or how much they're prepared to lose, more importantly. So they know every time they open a trade, I'm prepared to lose X amount, whether it's a dollar amount, a sterling amount, or a percentage of their account. Most try to stick to the 1% to 2% rule and understand that and just accept that happens quite a lot. But sometimes, you get a big run and you get a 20% gain or a 15% gain, and if you've got lots of little losers, huge gains can more than wipe out those losers. So keep the losing trades small. Should a stop loss have a big room compared to take profit? Nala, my friend, don't risk any more of your money, okay? The two questions you've asked, okay? I don't know if you're trading with real money. Understand those basics. Understand the basics of leverage and margin and what the question you've just asked me, okay? What you want to be doing is obviously, if you're going to lose X amount, you want to be winning X amount plus something, don't we? So whatever your stop loss is, you want to be trying to be making too much, at least a little bit more, don't you? So if your stop loss has to be where it has to be, and I always say that to traders. So for instance, using this particular chart here, let's have a look. Whatever this is, it doesn't matter what the chart. This particular strategy that's on the screen here is a trend following strategy using the moving averages. So the rule is, first tick is that the blue line here, we're looking to go short here because the market's moved up. We've been trending higher. Thank you very much. We've got out at the top here, or we've got out here as it's closed out, as we stopped going up. So at the moment, this is looking to go short because after this, so we've got the blue line crossing under the yellow line. That's first tick. We don't enter the trade using this strategy here on this particular chart, again, it happens to be the NASDAQ on the 1 hour chart, until that point there, that would have been your entry, okay? There, that's your entry there, 11,990. I hope you can see that, okay? So the rule should say, well, again, it depends. Technically, the market is turned all the way up there where that line is at 11,000. So that, I mean, let's do this very, very conservative. So that would be your stop loss, okay? If you're using the rule. So you want, so that, see that distance there? So that's 990 points. That's huge. So you'd be looking of a target of around about 990 points at least, because that's how much you're risking. So that would have worked out, wouldn't it? If you'd done a 1-for-1, that's your risk. That's your reward. I mean, 1-for-1 risk reward is not great. And I'm not saying that's the best way to do it, but that would have at least worked out there. You would have had a winning trade there, wouldn't you? So that, Nala, I hope that's explained your question. Go and watch some of our other webinars on risk reward and stop loss positions and what have you. Jamie's asking a very, very similar thing. What would you recommend as a good risk reward for a starting trader? Well, as I said before, Jamie, a lot of the textbooks talk about a 3-to-1. So you risk $1 to win $3, or $10 to win $30, $100 to win $300. It doesn't have to be that much, but lots of people talk about that. So at least 1.5-to-1 or 2-to-1. So on this particular setup here, this one here we've got here in front of us, if you do put your stop loss all the way up there, I mean that's very, very safe, that one up there, because we didn't get to it, did we, on an end of hour day? That's, you can count. The other way of doing it is counting back candles, so the lowest or the highest high of the last 3 candles, but it would still be at the top of that wick, wouldn't it? There, so it's still 960 points. Okay, can you see that on the screen? I don't know if you can. 960 points. So 960 points is around about just down here, isn't it? We've just about got it 1-to-1, but 1-to-2. It's 960 times 2. It's 1,800 and 1,900 nearly, isn't it? So we're all the way. We need to be all the way down here. So 1-to-2, that trade would either still be open, or if you've moved your stop loss down as the trade's open, you would have probably brought it down to about here, and you might have brought it down here as it's moved down, and then you'd have been stopped out as this is retraced. But then perhaps got back in there, and then it's retraced. So it hasn't worked out really on that 1 hour basis. It still might. But yeah, 1-to-2. I would say, Jamie, but again, I can't advise you. I'm not allowed to do that. But use your common sense, okay? You want to be making more than you're losing, even if you're, as the Victorian says, you make 11 shillings, or is it 11 pence? Happy days if you lose 10 pence. If you lose 11 pence and make 10 pence, misery. I'm paraphrasing a very famous English Victorian phrase very badly, but you get my point. You want to be making at least a little bit more than you're risking or losing. Okay, Jamie, Nala, I hope that's answered your questions, guys. Where was I? Alex was asking about the NASDAQ. Well, there's the NASDAQ. We did the NASDAQ, didn't we? Let's have a look. Who else is still here? KJ, the Dixie, the dollar index. I don't know what time frame you're my friend, but it's gone back not only over 110. I haven't got it marked on this chart, but let me stay look. That is a bid market, ladies and gentlemen. The highs have got higher, haven't they? We had a bit of a dip, but the highs over time, going back to whenever this is January, this is 2022. What a rally the dollar index has had. Anything over 100 was really, really bullish. And I said this a couple of weeks ago. I keep meaning to dig up our 2022 predictions, the things we do at the beginning of the year where markets may go based on weekly charts. But no, I'm sure nobody, we certainly didn't write about a 110 dollar index in 2022. The dollar has just been the story of the year thus far. We're only 3/4 of the way through it, but it's still very, very big. It's the only game in town at the moment. And the contrarians, those that think, well, this can't keep going up, might start. So I think, well, the dollar's high enough already. But at the moment, so far, from a trending point of view, it's got breached 100, breached 105, breached 109, and 110 was breached earlier. So that continues to be bid on a daily basis. So as you come down, trading out intraday, yes, we've had some significant declines here, but the trend has remained up. This 20-day moving average has remained fairly intact all year, hasn't it? A dip here in August. But we rallied into the end of the month, and we've rallied through September as well. So a big dollar rally is still in play. Remember the dollar index, KJ, which I'm sure you do know, is a weighted index. There's only 6 currencies that create this dollar index, and the biggest weighting in there is the euro. So the weakness of the euro accounts for over 50% of this index. Will have had a significant bearing on the movement of the dollar index. So 110.39 we trade at the moment on a 4-hour basis today, or this week I should say, sorry, it's been bid again from earlier in the week. So big up candle here on the 20th, was that only yesterday? Yes, so breaking those highs there, see through there. So we broke through that resistance there at 110, or just above 110, yeah, 109.90 was the resistance last week. And we pitched through that and earlier yesterday, and we followed through today to the upside. And that intraday high that we got at 110.76 from the early September is the next line in the sand for dollar index. See what how the Fed moved the dollar index. So that's a 4-hour. And the 1 hour remains even better bid. There we go. It's a big break yesterday here on the 1 hour. Nice and clear there, isn't it? And that's just continued to rally from 12 o'clock yesterday from the downtrend we'd had here for Monday into Tuesday, down to test 109. And off we've gone and run. So dollar index remains bid. My friend Quasim asked about gold. Gold remains weighted. I talked about gold earlier, but let's have a quick. That was ages ago now, wasn't it? 1680 key level has been breached. Let's see the upside. Where's my gold chart? Gold here on the 4-hour. There's that 1680 level. That's our next resistance today. Then 88, and then the key 1700 up here. This is the gold on the 4-hour chart. The 50 period moving average is at 1691. 1700 is a big resistance as well. Currently, 4-hour traders, Kazim, we've had a big up candle that's just completed. Where's that one? That's the 8 till 12. Yeah, so this one's still halfway through. I've got an hour or so to go. So 1680 is really a big resistance today to the upside. 1 hour. There's that 1680 key 1680 level. Bid from this morning a bit, triggered long here at 10 o'clock. Continue to move higher. Yesterday's high was within a smidge of 1680 at 1679.25. But on an end of hour basis, it was 1677. So that's your first target on an hourly basis. Then we got the high here from Monday at 1678 to the upside. So it's sort of it's moving higher currently ahead of the Fed. See how it all fans out. Is gold going to keep dropping? Well, London, it's in a downtrend as far as the daily market is concerned. The 20-day moving average sits there at 1703. So we got some big resistance before we get there. Let me zoom that up. As you can see, the markets the moving averages are all nicely aligned. 50, 21, 9 and 5, all aligned together, all in order when I say aligned, and continuing to move lower. As you can see on the end of day basis, it hasn't wanted to close below 1665. So that's the big line in the sand on an end of day basis. So I'll see where this finishes. If we break under that key 1665 level on an end of day basis later this week, and see with the MACD still moving lower. RSI 37 and weak. It's been into an overbought zone. It's sort of ticked up a wee bit. We have had, we've got an update today. We've had 2 updates out of the last 3, but we did have that huge shakeout last week as well. So, it is keeping dropping. The trend is to the downside, London. That's all I'll say. Jacob, good afternoon. Hope you're well. Hector, problem load shedding. Oh, that's... I guess you're in South Africa, Hector, my friend. My commiserations to the situation with regard to your electricity supplies down there, my friend. Is SMC a valid idea? De Kelly, I don't know what you mean, my friend. Dollar and gold are always in opposite directions. Well, remember what the gold is quoted in dollars. So if the dollar's strong, remember, as with anything when you're trading, not only currencies, but it's a pair. So you're looking at the difference between the pair. That's what contract for difference means, a CFD. So if one side of the balance is strong, it's going to weigh on the other side, isn't it? And if the other side's weak as well, that's only going to move the trend in one direction, isn't it? So we've got a strong side and a weak side. That's what you're looking for, because that's going to create a trend. So here on the gold chart, Rifumo, we got a strong dollar and a weak demand for gold. So therefore, from here in August, when we were over $1,800 an ounce, a troy ounce, here we're all the way down at $1,650 or $1,654 a strong ounce a couple of days ago. That's a massive, massive move for the gold market. So yeah, the trend is very much to the downside. Bilal, cable. Oh, what a mess things in the UK are at the moment. So cable, 1300 was tested today. Cable, Bilal, I'm sure you're trainer, but there we are, 1303.37. 1303.37. 113 for cable against the mighty dollar. And again, we've got a weak sterling and a strong dollar. So again, it's a trend that's only going in one direction currently. That's the 4 hour. That's the miserable daily chart, or if you're the right side of the trend, which trend following traders will be, that's a very nice trending chart. So from a rejection up here at the end in the summer of 122.60, we're all the way down here at 113. There's no sign of that giving up the ghost at the moment. And look at the big shakeout we had last Tuesday when we had that big surprise from US inflation. US CPI was better than, or hotter than expected. So back under 115 and 113. So the down trend remains, and these levels are 1985 levels. Sierra got married 1985. It's a lifetime ago. Trust me, ladies and gentlemen, it's a long time ago. And that's where sterling sits at the moment. So the contrarians out there will be saying, well, there we go. Now it's bound to go up. It's got to go up. It can't keep going down. Well, never fight a trend. Never try and catch a falling knife, as they say. The trend has been going down, not just this year, but last year as well. Sterling is under pressure. The current government won't say the word Brexit, but that's adding to the woes. UK is expected to be the worst performing of the G7 economies next year. Only Russia is performing worse, not as a member of the G7, but of the world's top 20 countries, only Russia is performing worse than the UK, unfortunately. And let me just go back to my webinar, guys. Kevin's just saying, I joined a bit later. Kindly remind me what the values of the moving averages, says Kevin. On this particular chart, Kevin, this is one we've been using actually today. The magenta one is the 21 EMA, exponential moving average. The yellow one is the 9-period EMA, so 9 periods, it counts back, 21 periods, 9 periods. And the blue line is the fast moving, the shorter one, faster moving, so it's closer to the price action, the 5-period moving average. So we got the 5, the 3, the 5, the 9, and the 21. Sometimes I use the 3, the 5, and the 21 as well, but it doesn't really matter. It's all about the alignment of the moving averages, Kevin. So the trend here on this particular chart, this is sterling cable on the 1 hour time frame, is to the downside. It's a bit of flatness in the signal line on the MACD, but that's just because we got to these 1985 lows. And there will be buyers down here at 1,300, 113, but it's to the downside. Colin's saying, if the Fed goes with 75 basis points, what would you expect to happen to the markets, and what would you expect if they announce a 1%? Well, what's priced? When we're saying things are priced in, Kevin, it means Colin. Colin, not Kevin. Kevin was the previous question. Colin. They means that there may not be a bit of a movement. What markets tend to do, though, or what market makers tend to do, the big players, the banks, they will move it anyway just to create some sort of volatility on the announcement. Okay, look, let's just have a look at these daily timeframes. The dollar is dominant. This is the euro on the daily timeframe. So the dollar is dominant. Euro's under parity, under the 1 level. Who would have thought this? Just a few months ago, let alone a few years ago. under parity and sinking. We went to 1998.84, so it's still pressured. So a 1% hike, which is quite unexpected, is only about between a 15 and 12% chance of that happening. Last time I looked on the as far as the futures market is concerned. Would be a major surprise. Markets hate surprises more than anything, so the dollar would shoot up. Or the converse of that is that the markets would have been caught out. Well, the dollar would probably still rise, but the surprise of them moving by a whole 1% suggests that they are serious about inflation. So ironically, the dollar might rise and stock markets might rise as well. Because think, well, they're actually on top. They are getting on top of this, and they're getting on top of it quickly. Therefore, they're going to get to the terminal rate, i.e., the peak of this interest rate hike cycle, which could be 4% or 4.25%. Nobody's quite sure yet, and it might come earlier than the first quarter, the first 4 or 5 months of 2023. So that means, that's actually priced in. So that would be the thing. The 75 basis point is what's priced in, so that isn't going to shock the market. So this trend we've seen is going to stay in place. What will move the markets, Colin, is anything in the statement that talks about the QE being the QT being increased, i.e., how much of the balance sheet they're selling off. They're supposed to increase it to 90 billion from 47 billion, I think, this month. Because that has a sort of an effect of raising rates as well when they started putting all that liquidity, taking that liquidity out of the market. And the dot plot, the most important thing really is what markets in them. You hear them talking on Bloomberg and CNBC all the time, and the other TV channels, and on Reuters and Bloomberg.com. It's the dot plot, where they're expecting the rates to go and how quickly and at what time. So there's lots of clever brains there, and they all have their own opinions. Some are more hawkish than others. They're all relatively hawkish now, which means they want to be aggressive. So that's always good for the dollar, and therefore, if it's good for the dollar, it weighs on everything else. It's bad for commodities because dollar price goes up. It means pressure of things, price of oil and gold and other commodities get pressured. But obviously, that then has a knock-on effect to actually cooling the inflation cycle. But so that's where we go. Remember to keep hydrated, says Jamie. You're absolutely right, my friend. Jamie, thank you for that. You're right. Right. Felix, Aaron, sorry, did you hear what I just said to, because somebody was asking me about the moving averages. So the yellow is these are moving averages. If you don't know what moving averages are, Aaron, if you're completely new, you won't, will you, of course? Watch our moving average webinar. Moving averages are what they say. They count back a certain number of periods. Look at the price action over that certain number of periods. So this magenta line here, the pink line, counts back 20 of these candles, and that's the average of the price over the last 20 candles, is what that line is plotting there. The yellow line is the 9 periods back, and the blue line is the five number of candles back. Basically, it's that simple. Because it's it's not that simple with that one, because it's something called an exponential moving average. It's different to a simple moving average, but a further explanation on that is in our moving average webinar. So have a look at that, Aaron, my friend. Okay. Do you use supply and demand zones? Jamie asks. Jamie, for me, the horizontal support and resistance are by far the most important. I know you get, support and resistance on the moving averages, support and resistance here, but supply and demand, support and resistance, for me, interchangeable words. It's not something I've used to trade off or I talk about, but yes, it's, for me, Jamie, it's a very, very similar thing. And the horizontal levels for me remain very important and the most important. And again, it's the psychology of it all, Jamie, as well. These round numbers, when I say round numbers, the ones ending 00 or 5, that's what sits in human psychology. And I know the market is driven by computers and algorithms, but really, even computers and algorithms are written by and coded by people, and people are very structured beings wherever we are in the world. And so zeros and 5s become absolutely key, which is why there's a big thing about obviously parity, i.e. euro dollar getting to 1.000. And here we are at under 0.99000. So yeah, they're the key levels really for me. So I don't really use supply and demand in that sense, but they're very much interchangeable: supply and demand, support and resistance. Good morning, my friend. Hope you're well. Thank you for being here. Imperial Enterprises. What's next for the euro? Bullish or bearish? When you say, well, it's consolidating below parity. So it needs to break away from parity. It tried it last week as a dollar week, and then we got this CPI number. So we went to test 1.02, but in historical terms, it's still very, very weak. And the euro area is riven. The Germans have had to buy Uniper, one of their big gas suppliers. The government's had to buy Uniper. The right wing in Italy seems to be holding sway again. Italy, the big divergence of the yield markets, the two-speed Europe, all that sort of talk. It's the recession in Europe is going to really, really hurt, or is really, really hurting. Trust me, we live here. Let's all say bye-bye to Andrea. Andrew's got to go, so I'll say bye-bye, Andrea. We'll see you in a week or so. Yes, thank you very much. Yes, Andrea's off, everyone. It's a big question. It's bearish, my friend. Why do I say that? Well, technically it is. It's under its 20-day moving average. It needs to break over parity and hold it significantly. It did it for 1-2 days, came back down very aggressively. I haven't got a 50-day moving average on here, but it'd be up here somewhere. So it's bearish. Can all change very quickly, of course, but the outlook remains bearish, I'd say. SMC is amazing. For SPC 3T, I don't know. I've been very uncool on it. Aspect, that means, isn't it? Aspect. Tell me, send me a message. Send me an email. SMC. I want to start trading SMC. Who's SMC? If it's a competitor of ours, you can go away. SMC? Anybody know who SMC is? Anybody in here? No? Everybody's no? Anyway. Kuram. SMC gives like a profound feeling to the trading job, feels nice and worthy. Oh, okay. Guys, yeah, okay. As I started at the top, trading as a business, it's a psychological business. So you've got to get your head right. You've got to accept your nerves and your fear and your greed and all that other good stuff. And, discipline, patience, all basic stuff. Lots of tips and tricks I can talk to you about. Smart money is a trend. Yes, I'm with you now. Sorry, when you're talking about smart money, yes, it's the leading where the smart. It's a phrase. Yes, I am aware. It's obviously been around for a while. The leaders, the players, the movers of the market. Yes, but do you really know? SMC, smart money concept. Okay, all right, fair enough. I've got you. Okay, yeah. If you can really tap into it, that's great. And the best of luck to you, my friends. But it's hi. Could you explain? Sorry, Alfonso. Can you explain the EMAs and how to use them? Thanks. Yeah, this particular setup, Alfonso, is a trend following strategy, right? I guess you're quite a new trader. Don't get too hung up on strategies. Lots of people say, what's the best strategy? What's the best time frame to trade? There isn't a best strategy in that sense. It's what works best in what the market is doing at that particular time. Okay, so if you're trading the 1 hour time frame, your stops and your losses are going to be a lot closer than if you're trading the daily time frame. The chart looks very different, doesn't it? So these are the scale changes to fit the chart. So, and then if you were trading a 5-minute chart, the candles might look the same, big similar sort of size to fill the page, but the amount of movement they're doing is much less, isn't it? This is .9900 to 9930, so it's only like a 30 point move there in all of that move. But again, what this strategy is, Olafrencho, is a trend following strategy. So to implement this setup, the 21, the 5, and the 9 exponential moving averages, you've got to wait. It's a simple crossing exercise. It's not perfect. No strategy is. But what you'd have seen here, this would have been short down here, and then here at this point, whenever this is, again, it doesn't matter. That would have gone. This strategy, if you were trading on the 5-minute time frame, would have gone long. You would have taken an entry there because we've had the fast moving average, the 5 crossing above the 9 period. That's the first one here, the 5 minutes before we actually entered the trade, or you'd have entered the trade. And then the second trigger is that the candle closes above the 21 EMA. So we've got to be in alignment, which we are now, aren't we? We were above the 21, the 5, and the 9. So it's 21, the 5, and the 9. So hang on a minute, that's not the wrong way around, isn't it? What I'm talking about. Anyway, it's crossed above because it's been going down. That's the last to move. So we've gone long here. So your stop loss should be, again, at the turn of the market. So technically, ideally, if you've got enough margin, your stop loss should be there, your entry there. That's quite a big move, isn't it? So that's your risk. That's R1, if you like, the risk there, 115 points. Can you see that I don't think you can see that on the screen, but it says 115 points or plus 0.12%. So we want to go at least another 230 points, don't we? So we want to be up here somewhere at least for our target, which we got to within 2 or 3 bars or 3 or 4 bars, didn't we? So that's our 1-to-1. If we'd wanted to go, 230? So 230 points would be around about here. So again, within a few bars, we got 2-to-1 risk. So if our target was there, we'd have got 2-to-1 risk reward ratio. The other way to trade this is if that's your stop loss down here, initially at the bottom, you move the stop loss up as the trend starts to unwind. So that's our stop loss here. We sort of move it up. Can you see it moving? It's not moving. Yes, it is moving. Let me make that. Can you see that yellow line moving? That's our stop loss now. So we entered the top of that. So as the price moves up, we might move our stop loss up as well. So as the price moves up to here, we move our stop loss up. It would have gone to about this candle here, this big white one here. We probably did actually, as that's moved. That's looking quite positive, isn't it? As that candle's complete, we might have moved it up. But this is a bit close because it's only one candle's worth behind. But it's so, and then you would have been. It hasn't got any higher, has it? It's rolled over, and then you would have been stopped out at this level sort of 20 minutes later. So that would have been your profit, 99.26. That would have been your profit there from that level there. So you got it down here at 99.095 and got it out at 99.26. So if you could do that a few times a day or even once a day, 20 pips, you're a very successful trader. And that's what trend following does. You see the moving averages are aligned. Then what happens is we got to the top and it rolled over and then it went flat, they went sideways. They're no good there. So now we're looking to go short because we're messing about, aren't we? We haven't gone under. In fact, we'd have gone, there we go. It would have, that system, if it had been automated, it then went short here with our stop loss up here, and that would have sort of stopped us out, wouldn't it? Actually, it wouldn't have, because unless we'd moved because it went against us immediately, didn't we? So this one here would have went short there. Our stop loss would have been above these two candles here somewhere to start off with, certainly sort of around there, top there, or you might have had it there or something or whatever. Anyway, it's up there. And then it went against us, didn't it, immediately? And that's when a lot of people would have panicked and got out. But it didn't. You didn't move your stop loss because we haven't moved down. And now we'd have followed this down. And our moved stop loss probably down about here. We might have moved it down a bit, but it didn't. It sort of rephased. So we could have moved it down now, perhaps to the top of that wick at the bottom of that candle now as we're down. But we're still in profit, aren't we, because we're moving down. Okay? But anyway, that's trend following in a nutshell on the 5-minute chart for the euro. So at the moment we're down, we're back, and we've been under one. Lots of ways to trade that, and watch the full webinar, Lufonchu, sorry, about how to trade this particular setup. There's lots of ways of doing it, but you're still short basically on that 5-minute euro dollar chart. That's what that's telling me. Okay, I hope that's explained things. Colin, is it the same Colin that's Colin Gray? Yes, Colin's left and he's here. Yes, I think I've explained that earlier, Colin. He's gone. All right, Colin, thank you for your time, my friend. Stay safe and may the pips be with you. I'm interested in who's willing to teach me. Sindhu, Lots of people will teach you, Sindhu. We're here to help you, my friend. So go to our website, hfm.com. Look on the education tab, and there's lots of videos, there's ebooks, there's webinars, these recorded webinars to watch, there's videos to watch, there's video courses to watch. You can download the ebooks, but contact us as well for any help you might need. We're here to help, basically. Okay, so keep in touch, my friend. I've run right over time, and it's 10 past, not too much. Thanks, you are a gem. Karam, no problem, my friend. We're here to help. Honestly, lots of people don't believe me when I say that, but. Emma, hello. How are you? Hope you're well. You can start with the demo. Absolutely, learn to learn and understand the markets. However, you should be ready to lose some money as well to make some profit. Absolutely, it's a risk-based market, Samuel. So you've got to be able to manage yourself, manage your risk. I don't know where you are in the world, but on Saturday I'll be in Nairobi and Sunday, in fact. We're doing an all-day webinar Saturday, seminar face-to-face all-day webinar on Saturday and Sunday. So if you Saturday, I know is sold out. Not sold out, but all the tickets, all the seats have reserved. So Saturday's full, and I think Sunday's pretty full as well. So, but if there's any spare, do come and listen to me face-to-face, and I'll explain things a bit more slowly over the course of the day. But basically, yeah, it's a risk management business. This. Samuel, and don't most people have too much have put too much expectation on the money they invest in their account. They're expecting too high a return on it. That's one of the major faults people make as well. It really is a mind game, trading. Good morning. I wish to ask why there's always reserve after open the position. Example, the market going down after open and a buy. I don't know what you mean. Let me read that again. I wish to ask why there's always a reverse after open the position. Example, the market going down after open a buy position. This might be a misunderstanding of what's happening. Remember, can you see the brown line on there, everyone? That's the current bid line. Can you see this on the euro? I can't make the chart any bigger, but that's the bid line. If I just remember, the spread will always mean that as soon as you open the position, whether you're going long or going short, you'll always be out of the money, my friend. Okay, let me just show you the. So as you can see, if you show the, there we are. So can you see this? It's ticked it's the bid price line. That brown line there, can everybody see that? Can you see the bid price line is ticked? If I tick this one as well, the ask price, remember there's the bid and the ask. That's the spread on the pair, okay? So if you're going long, if you're going, you want the price to go up, you pay the high price. You want the price to go down, you pay the low price. So that's the spread currently, zoomed right in here, okay? So that's what happens, you see. So if you're wanting to go the price to go up, you pay the high price, and you've got to wait till the lower price, the brown line, gets to the red price before you make any money, because that's where you got to sell it. So that's your buying price, that's your sell price. Okay, if that's what you mean. I'm not quite sure if that's what you mean, my friend. If not, ask another question. Okay, Mazzy, my friend. What is a margin call? Could Sir please explain what a margin call is at 30%? Right, a margin. If you've had a margin call, it means that you haven't got. Well, for a start, if you don't understand what a margin call is, stop trading. Okay, stop trade. Just don't risk any more of your own money. Okay, this trading is risky anyway, so you owe it to yourself and you owe it to your money to understand what you're doing and understand the basics of what you do. So you need to understand the leverage on your account. Like just to explain, you need to understand the spread on a trading position, not the price you put. These are the two different prices you pay. Whether you're going to go long and you want the price to go up, or you're going to go short and you want the price to go down. But you've got to have the other side of the trade move to where you've got in it to at least break even. Okay. Right. Sorry, you did understand that. Sorry, I'll come back to this question in a minute because let me finish off your other question. I mean, the trend, for example, the market fall after open at buys. Well, sometimes that's what happens. I don't know when you're talking about trading, but this is the 5 minute. Let's go right down to the minute chart. Let's show this as a demonstration. Okay, so here, same setup here. Let me just take all these lines off first. I'm not going to take all those lines off. No, I'm not. So there's the spread. You can see the spread there. Yeah, it's quite wide at the moment, relatively wide. But so at the moment, here on the 1 minute, if we were trading this strategy on the 1 minute chart, you'd have gone short here and you've taken it all the way down there. You got it out, got it back in there. That when it went long there, here, and it didn't work out, it just popped up there, then it wasn't doing very much. They've crossed, they've recrossed, nothing. So nothing's actually happening at the moment. So I had to stay out of that on that, just that very short 1 minute, because it's not trending. It's not going up or down. It's going flat. So I'm looking for it to move up. So there isn't a trend here. That's the thing as well. Remember, markets don't trend, or in fact, they don't trend very often. Most of the time, they're going sideways, and that certainly was what happened. Well, let's prove me wrong. It's actually been trending quite well, hasn't it? The dollar, so the dollar euro, so it's been down then. Excuse me. Then it went up for a little bit. Then it went short again. It's been short. Went up. It didn't work out. Sort of consolidated a wee bit there. Then it's trended down, retraced a wee bit, but trended down. Then a big up candle. That's quite significant, isn't it? All these down candles. Remember, the body of the candle matters. It's significant. So that's then gone up, and now it's going sideways again. So at the moment, if you'd opened a trend here, my friend, it's not trending. The moving averages are flat, just like what you had here. So we're waiting for something to break down. At the moment, we don't know. It's sort of not clear what it is. What that's saying to me, just looking at those candle formations, those down candles, aren't they? They're bigger than the white up candles, aren't they? So we had this big up candle. So there's a big support here at that round number, that .9900. See the big support here? But the down candle still, but it hasn't broken below. So we'd like it to break. There we go. Break below this level. This is the 1 minute. So obviously it's very, very volatile. But clearly, even for those few minutes we've been talking here, this 1, 2, 3, 4, 5, 6, 7, 8, 9, this 10 minutes, it didn't want to break under this 99.03, did it? And it did in that last minute. So although they haven't crossed significantly, that's biased to the downside again, isn't it? So it looks like it may be testing, down to this 99 level. And there we are. Just I'm speaking. You think I was moving that down, but there you go. And that's what happens, I'm afraid, my friend. So going back to your other question about margin call, understand the different types of margin that you're in your account. Remember what margin is. It's a bit like, it's related. It's not the same as leverage, but they're often interchangeable and they shouldn't be. But margin is the amount of money that you need to deposit to cover your positions. If you haven't got enough margin, the broker, whether it's us or anybody else for that matter, will close out your positions, and that's what's happened. So let me just answer a question. Somebody's trying to get hold of me. All right. So yeah, well, you understand, sort of margin, my friend. Okay. Kevin saying, "Are you coming tonight?" I am, Kevin. I don't know if you've registered. Say Saturday, I know is full, but try and come on Sunday, Kevin, and we can meet on Sunday in the hotel. I'll certainly come in the office. I'm going to be in the office as well, Monday through to Wednesday, running some introduction sessions as well for people that are at the webinar on Saturday and Sunday as well. So hope to meet you there as well. Peter's just said, can we have a look at gold? It's 1:15. Yeah, let's wrap this up. I'm an hour and a quarter in. Okay, I've just got an email. I will do that. Judith, don't worry about that. Gold, says Peter. Let's go. We did this earlier, Peter, but you obviously weren't here. So some key levels. I don't know what time frame you're trading this, Peter, but certainly the gold chart has a bit, or did have, key support at 1680 here. This is the daily time frame, and you saw that big down candle last Thursday here on the 15th, when we breached the key 1680 support level. Big down candle. We haven't been able to move down on an end of day basis below around about 1665 here. So this week, 1, 2, 3, 4, 5. So going back to last Wednesday, we haven't been able to break under last Thursday, under 1665, but that's now our support on an end of day basis. But the trend remains very much to the downside, doesn't it? Because the moving averages are aligned. The 20-day moving average is here above the big psychological 1700. So that's our 21 EMA at 1704. The big psychological 1700 itself sits just below that. And then we have our 9 period at 1684 and our 5 period at 1676. So that's the range we've been in this week. And 1680 previously was a big support area. So 1680 is the key area that gold needs to break above if it's going to go up. And if it's going to go down, it needs to close the daily candle below 1664.40 or 1665. So that's the range we've been stuck in for the last 4 days. But at the moment, it remains biased to the downside because of the strength of the dollar. We go down to the 4-hour time frame, still moving down, ticked up a wee bit today. We go down to the 1 hour. You can see, we've had quite a good move down yesterday significantly through this 1664.40, so through the key 1665. And then today we've moved higher currently ahead of the Fed. That was all to do with Putin's announcement of bringing up 300,000 reserves. Is it 300? I can't remember the numbers. The reserves with a clear admittance that obviously the war in Ukraine is not going far from to plan, and threaten the nuclear button without saying. Well, he did say it, but there we go. So I hope that answered your question, Peter. Gold remains weak. It's up today. The 4-hour remains negative. In fact, it's sort of closing. This candle looks like it may be closing over its 20 pips, so it may be turning around in the 4 hours. Well, the 1 hour has already turned this morning from this 1665, 1640 level here on that daily. But the daily remains very much range bound this week. And certainly from an upside, I'd like to see it above and close significantly above 1680, and then 88, and then 1700 to the upside. But at the moment, range bound ahead of the Fed later on today. Kelvin is asking, on 15-minute time frame, Euro USD seems to be going bullish. Is it right time to go long on the same? Kelvin, my friend, you trade the time frame that fits your personality. What is your 15-minute time frame telling you? Well, here it's gone sideways, not done anything. It first triggered long. Well, it actually technically triggered long here at 8:30 this morning, but it hadn't broken out of that range. I'd like to see, just looking at that, break over that range, which it did sort of 10 minutes later. So you might have got in there and then added to the position. It's gone up, it's retraced, it's gone up, it's retraced. So that's still bullish there. Euro 15-minute. Sorry, that's gold, not 50 euro. Sorry. Ignore what I've just said because you're asking about the euro, not the gold chart. Sorry, I'm going to tell you now. So 15-minute, that still looks weak to me, my friend. I don't know what chart you're looking at. That's weak. That's not bullish at all. That's short. So no. Again, I can't tell you what to do, but look, we're under that key 19.99 level at the moment. Is there any data at 3? I'm not sure, but that's weak. That would have been 15-minute traders using this strategy would have been long here, got out up here, and then gone short here at 2 o'clock. So you've been short for an hour and a half so far, and it's moving down 21.59 using this particular strategy. I don't know what else, but as you can see, these wicks to the south suggesting there's not much more short positions below the .99 levels. What that's saying. Please don't apologize for your English, my friend. I'm a systematic educator for it. I understand the risk. All right, okay. So you understand the systematic education. Right, cool. Okay. I am willing to learn and very appreciative of someone that willing to teach me something that I don't understand. Thank you, sir. I appreciate it. It's not a problem. Send me the probably quickest thing to do. I've got Arabic speaking colleagues, and I've got Islam works with us in Egypt. I don't know where you are, my friend, and we can put you in touch with Islam. But the quickest thing to do, let me just get rid of that, is if you send me. Send me an email here to webinars@hfm.com. Okay? Webinars@hfm.com. Put my name on it and I'll get you in, I'll put you in touch with Islam. You can speak directly in Arabic. You don't have to use English if you don't want to. Okay? We're here to help, my friend. Okay. Okay, let's have a look. I think that's the last question, isn't it? Yeah. Peter was asking about gold over on GoToWebinar, but I think we're about done actually. So let me just hide that. Let me just go back. Let me just finish off my slides. So that was the calendar we talked about earlier, wasn't it? It's all about the Fed really tonight. There we go. There's our Nairobi now. Extra day Sunday. There we go. So Enoch, Dennis, and myself and other members of the team will be talking with you to support you over the weekend and next week as well. So Monday, Tuesday, Wednesday in our office in Nairobi, fully regulated with the Kenyan regulators. So come and join us on Saturday and Sunday. Well, not Saturday because it's full, but on Sunday if you can. Sunday afternoon, I think it is 3:00 on Sunday afternoon. Those of you that can get to Nairobi or are in Nairobi or may want to think about it. So there we go. Tomorrow, Fibonacci, some advanced techniques with Otto tomorrow. Otto's a very good teacher. He speaks much more slowly than I do. Yeah, Fibonacci. I love Fibonacci as well. But it's one of those things that people think is magic. It's not magic. It's just what it is. So do come and have a look at what Otto's got to say about Fibonacci retracement extensions. I don't know what he's talking about tomorrow. Arcs. There's all sorts of things within Fibonacci. I'm not sure what Otto is planning to talk about tomorrow, but do join him tomorrow, Thursday, 12:00 GMT. Next week, it's Andrea with you. Harmonic patterns on Tuesday. Live analysis like we've just done today on Wednesday, and seasonality impacts of Forex trading. Interesting little seminar Andrew's put together there. A webinar Andrew's put together there. So join her next Thursday. Oh, you're in Malaysia. Sorry, my friend. In Malaysia, Muslim, and I prefer English. Okay. Well, again, I've got colleagues in Malaysia as well. But send me an email, and I'll put you in touch with somebody locally in Kuala Lumpur. I don't know where you are in Malaysia, but certainly we'll be in touch. And we can speak in English as well if you like, my friend. Not a problem. So people ask me about books and course and all the rest of it. These are three of my favorite trading books of all time. The Reminiscences of a Stock Operator, story of Jesse Livermore, the boy trader, the boy plunger. Market Wizards series of books by Jack Schwager. This is the first one written back in the late 80s. He's written about 5 or 6 now in just the Market Wizards series. He's also written a really good technical analysis book. Again, which is, I think it's behind me. It might be at home. I don't know. And the most important one of all, when it comes to mindset and mind games, is Trading in the Zone by Mark Douglas, a disciplined trader. I've just bought another copy of it in the last week, which should be arriving today. And I'm going to give it away at our Nairobi webinars, seminars, because it's that important. Master the market with confidence and discipline and a winning attitude. Anyway, it's phenomenal. It's changed things for me, changed things for thousands, if not tens of thousands of traders around the world. This business is a mindset. Discipline, patience, acceptance of losing is what you've got to get over, unless you'll never get off first base, as the Americans say. So I can't recommend that book hardly enough. Mark Douglas, Trading in His Own, written in 2000, and a trading Bible, really. Anyway, there we go. If you're absolutely brand new to Forex, a lot of this went over your head today. If you want a book to get hold of, I could recommend Anna Cooling's Forex for Beginners book. It's 10 years old now, but it's really, really nicely written. It's easy to understand, explains the basics of Forex and the basics of the pairs and the different currencies and the countries. Really easy to read. Anna runs annacooling.com with her husband. David. They'll sell you courses as well, and CDs. I'm sure my age now, and software and what have you. But and a big volume analyst trader as well, Anna, really nice person as well. Anyway, there we go. If you want to get in touch with me, please email me at webinars@hfm.com. Follow me on Facebook and on Twitter, and follow all the stuff we write on our analysis page and our videos and our webinars and our Instagram page and all the rest of it. So take care, everyone. If there's no more questions, how can I get those? It's Peter saying, how can you get those books? Do you mean? Thank you very much for your time, Jamie. That's very nice of you, my friend. That's a very kind comment. How can I get those books, is Peter saying. Basically, they're available, obviously, at good bookshops everywhere, good business bookshops everywhere. I don't know if you've got Amazon or Book Depository or whatever you can get in your country. They are available as free PDFs as well. I shouldn't say this, really. The publishers will have my guts for garters, but Google them as a PDF download. The problem with a PDF download of these books is that sometimes some of the words are missing and the format doesn't look very nice. If you're a serious trader, I think I paid £25 for the last Trading in the Zone book. $30. It's not it's going to change your life, but it's a hardback copy. They don't do it in paperback, actually, Trading in the Zone. But if you're serious, $30, you should find $30 for investing in yourself. Again, that's what lots of people don't do, Peter. They jump into trading straight away with their $100, $1,000 or whatever it is, without realizing you owe it to yourself to get yourself a little bit of understanding. As with anything in life, experience helps. Doctors don't become doctors, in a weekend or following a course or watching a webinar like this, do they? And same, good traders don't become good traders overnight. So it takes time, it takes work and graft and understanding yourself and understanding what the markets are doing. So anyway, on that note, I will leave you. That was from Arabic and what's not come up? What's the relationship between US oil and UK oil? It tends to be the same. Kelvin, let me just finish that question. There are two different types of different types of oil. The main difference is the sulfur content. You'll hear US oil. US oil tends to be cheaper than UK oil. US oil is also known as WTI. Western Texas Intermediary is what it stands for. West Texas or Western Texas Intermediary, WTI. You'll see it talked about in the press. And UK oil is also known as Brent. Brent is a oil field in the North Sea. That's why it's called UK oil. It's not only available. US oil and UK oil are not only available in the UK and the US. They're found all over the world. But UK oil or Brent has a heavier sulfur content, and it tends to be more useful, i.e., it can be used for more things. When you distillate oil, you break it, you refract it, crack it down into useful parts. So it's petroleum for cars, diesel, pharmaceuticals, chemicals, all sorts of things can be derived from oil, which is why it's so valuable and so highly sought after. Obviously, produces a massive amount of carbon when you burn it. So it's a fossil fuel and it's going to disappear. But yes, they will tend to move in the same price because the price of oil moves up and down. Some things will affect US oil more than affect Brent, or WTI more than affect Brent, and vice versa. But typically, Kelvin, the price of UK oil, Brent, is always more expensive, $2 or $3 a barrel at least, than US oil in a typical trading day or typical trading phase. So that's the difference between US oil and UK oil. It's the sulfur content, basically. But more on that on our website as well. So if there's no more questions, I'm going to go. How can I find the books, says Anthony. The books, Anthony, either, I say, Amazon, Book Depository. Try Googling for PDFs. I don't know if you might have a chance of winning one if you're in Nairobi. But free PDF downloads can be available as well. But I shouldn't be promoting that. Publishers will have my guts for garters. Right, I'm going to go. I'm exhausted. I've been here an hour and a half. So take care, everyone. Stay safe. And we'll see you again soon. All the best, everyone.